Welcome back to Growing Your Savings Using Blue Chip Stocks. Today is February 7th, and we're into the second month of the year. Prices have been updated for the end of last week. We're going to check in with our listing of Canadian stocks on the Toronto Stock Exchange and our U.S. stocks on the New York Stock Exchange and NASDAQ, as well as my 4 fantasy TSX portfolios to see how they're doing. My $5,000 portfolio is holding steady at 0%. My $10,000 portfolio is up 2%, which is up from 1% last week. My $25,000 portfolio is holding steady at 1%, and my $100,000 portfolio is up to 0%, which is up from minus 1% last week. Each portfolio will also show you the dividend payout so you can see how the stock market pays you. In our Canadian portfolio, you will see that I have updated today's date. These are last week's prices for each stock. So in manufacturing and industry, we're a little bit more on the negative side, but we're starting to see some green come through. Linamar is down 13% right now since the beginning of the year, but that's not a bad thing. Linamar, like the rest of the companies on this list, are very strong Canadian companies that aren't going anywhere, and most of them pay dividends. So when you see that a stock is down minus 13%, minus 10%, something like that, that lets you know it's a really good time to buy in. It started out the year at $80.34. Currently, it's down to $69.52. It was up at some point last week around the $75 mark, so it did get back up there. You know that at some point in time, it is going to get back up to this $80 price and more than likely surpass it. So Linamar is a good buy. Consumer goods and services are doing really well this week. We have way more green than we have pink. So we've got Maple Leaf Foods is showing a good gain of 6%. Finance is sort of a mixed bag. We've got half and half. We've got a 4% increase with Great-West Life. On the other hand, Home Capital Group and IGM Financial are down 8 and 6%. Both of those would be good things to buy right now. Resources and commodities are starting to do really well. As everybody has seen, the price of gas and oil has gone up dramatically since the beginning of the year, actually way into last year too. So we've got some good gains here. Cenovus Imperial Oil up 6 and 7%. Ovintiv is also up 7%. And Suncor doing well at 2%, and it stands to gain more. It's been in the news recently with some really good business decisions. Utilities are the best of last week. Everything is up. Emera has basically not changed at all. It's only down, it was 59.82 at the beginning of the year. It's only down 4 cents. So utilities are doing really well. They are all good things to invest in. So our overall gain in the Canadian stocks listed right now is 0%. So basically everything's holding, it averages out at 0%. So it's holding steady. Pretty good showing. So in the U.S. side, we'll start up here with manufacturing and industry. And I heard something this week. There's rumors flying around that Google might go into a 20-to-1 stock split this summer. That's good news for regular investors because the price this week was $2,865.86 for one share. That's usually out of reach for your general public. However, if they actually go through and they split the stock 20-to-1, that means that for every share, they will split that one share into 20 different shares, and the price is going to come way down. So based on today's share of Google, if they split 20-to-1, one share would then cost $143.29. Way easier for normal people to buy into. So manufacturing is starting to turn green. We still have some pink. Intel, for example, is down 12%. That would be a good buy this week. $54 at the beginning of the year, down to 48. That's get in there, and you're going to make some money because for sure that's going to come back up. Stanley Black & Decker, down 12%. Another good buy right now. Consumer goods and services, a little more on the negative side. Things are just starting to come up now, but we have some good gains with McKesson at 5% and McCormick at 4%. Finance still down for the most part. We've got American Express and Visa starting to come up. However, PayPal took a big dive this week. They went down 28%. They started the year at $174 and they were down to $126. So PayPal is still a very good, strong company, not likely to be going anywhere. PayPal would be a good that would be a good buy. If you were to get in $126 and it recovers in the next month or so back to 174, you're going to get some good gains. Resources and commodities, nice strong showing here, up 7 and 5. Newmont is the only one just off a little bit. Utilities were down. Just AT&T is down. The other ones are pretty much holding steady. So AT&T would be a good buy for this week. So the overall US showing is minus 3% at this moment. So let's take a look at the fantasy portfolios and see how they're doing. So the 5,000 portfolio, we are holding steady at 0%. I bought into this. I put $5,083 into it, and we're showing today 5,098. So in this past week, we gained $2. Last week we gained 186, so we have an overall gain of $188. Dividend payouts for the $5,000 portfolio, $185.52 a year. The $10,000 portfolio is showing a gain of 2% on the year. We originally invested $10,079 and we're up to $10,276.07. So last week we showed a gain of $329. This week it's showing a gain of $111, so an overall gain of $440 between last week and this week. The dividend income for the $10,000 portfolio is $336.74 per year. So let's take a look at our $25,000 portfolio. We have a gain of 1%. We invested $24,860. We're now sitting at $24,958. So we showed a gain this week of $398, and we showed a gain last week of $690. So don't forget that this did drop off here, so we had a little bit of a loss from the beginning of the year to the first week that we started recording. So we've now gained, since that first week that we started recording, we have gained $1,088 on the $25,000 portfolio. The dividend income for the $25,000 portfolio is $699.28 per year. Let's take a look at the $100,000 portfolio. We have a really good showing on our consumer goods and services. You see we've got a lot of green there. Finance is a mixed bag. Resources and commodities, nice strong showing there. We've got some strong gains with just some small setbacks for Nutrien and Tech. And utilities, we've got strong gains all around. We've got Emera showing a 0%, which means it's holding steady. And we've got strong gains in the other utility stocks. So an overall gain in the overall average in the $100,000 portfolio is 0%. We initially invested $99,981. We're standing today at $100,196.50. So we started recording on the 25th of January, and we gained $3,007 last week, and we gained another $853 this week, so for a total overall gain of $4,160 from when we started recording in January, or when we started recording the difference in January 25th. So the dividend income for the $100,000 portfolio is $2,326.17. All of this reinvestable back into the portfolio. But if this was a real portfolio, you could reinvest that money if you wanted, or that would be cash that you could take. So please join me next week on February 14th. I believe it's Valentine's Day, and let's see how our portfolios are doing then.